Hey guys, we're gonna go ahead and talk about personal finance part four. We're gonna hit on SSEPF standard 5. This is over personal finance and insurance. We're gonna talk about how it protects yourself and your family. The learning target and essential question for the week is essentially what is insurance and how does it protect you from financial loss. So let's get started. All right, so what is insurance? All right, so it's got to be purchased. When you purchase insurance, you receive an insurance policy. All right, this policy is going to curtail every little detail that you're covered for based on what you put in from financial loss. So by purchasing the policy, you're trying to create a safety blanket against risk or financial loss. So if anything were to happen, you are to be covered should you buy into an insurance policy. All right, so these policies, they vary by what they are, the company you purchase them from, and factors related to you specifically. What do you need? Do you need life insurance? Do you need auto insurance? Do you need health insurance? Do you need disability insurance? This all pertains to, specifically to you, what you feel is important to you. And through the next couple of slides, I'm going to wrap up, what other different types of insurances, as I just mentioned, and pretty much determine, whether or not you feel like you need it. All right, so how does insurance work? Okay, you got to purchase a policy. The policy outline is going to look something like this. All right, you're going to have coverage limits. This is where you have the maximum amount a company will pay for your loss. So if you see, let's say you have, your health insurance and you go into the hospital for surgery. If the maximum amount of that company, whatever it is 250,000, anything over that you have to pay out of pocket. Now there's a thing we'll call deductible, and we'll get to that in a sec. So your premium is the amount of money you pay for your coverage. This can be monthly, this can be quarterly, which is about 3 months out of the year, which is 4 times. 3 times 4 is 12 months in a year. Or you can pay full a year. Now, depending on your company, they may give you the option of paying monthly. This is very familiar with auto insurance. Quarterly the same, and then yearly. Most, if not some companies, require you to pay the full year term before they actually begin coverage. All right, now the deductible is the amount you must pay for the company pays. All right, so this can be some similar as if your copay, which is $50 generally on average every time you go to the doctor. Okay. Also, this may be in regards to your health insurance, a $500 deductible, a $1,500 deductible, a $2,500 deductible. I believe in with my insurance, my deductible is $1,500. After $1,500, my insurance pays up to 100%. Okay, so they pay for the rest. So until I make that deductible of paying out of pocket $1,500, my insurance will fully cover anything that I go for within that policy term. Now, a claim. This is a request for payment of losses. The most common one you've probably seen on TV is your accident claims. This is basically where when you get in an accident, somebody hits you or you hit them, you file with your insurance in order for your insurance to kick back and essentially try to help you or cover you in a sense, depending on what happens. All right, so how does it work? You got to choose a plan. You got to pay your premium. Like I said, you can pay monthly, quarterly, or yearly. You got to file a claim. Okay, if something were to happen, you have to file a claim to send out to your insurance company as far as what have you lost. Okay, what is the problem? And what do you need to get reimbursed for in case something happened to you or if you lost something due to an accident. You got to pay your deductible. Okay, like I said, with most insurances, this can vary. The most common would be your health deductible, which would be, ranging from $1,500, $2,000, depending on how much you put into your insurance, will essentially lower your deductible. All right, and then with that, once you pay your deductible, the company, whatever insurance company you had, they pay for the rest. And that's up to your coverage limit. So understand, just because if I say up to 100%, if my limit is 250,000, after 250,000, then I would have to pay out of pocket. All right, so there's some types of insurance, okay? We have health insurance, property and mortgage insurance, which is your house, automobile, disability, and life insurance, or rather known as death insurance. All right, so let's take this in consideration. Here's a prime example. Let's say a person decides to take out a mortgage and buys a house. The mortgage payments last for 15 to 30 years, and the person would be responsible for paying it even if the house got hit by a meteor one day after finalizing the loan. To guard against the possibility, it is clear that this new homeowner needs what type of insurance based on what we just talked about. I'll give you a sec. All right, that's right. Mortgage and property insurance. Okay. This protects the belongings as well as the value of the house. Okay. So for example, if you're paying, your mortgage, it can range anywhere from 5 years to 30 years. Okay. The average range is about 15 to 20 years. Let's say your house were to burn down. As long as you're making payments on your mortgage and you aren't having, insurance for your property, you have protection against the belongings that you have. So whatever the value of the items that you lost, you essentially be reimbursed that money for that product. Okay. How about if you're renting though? Okay. Does mortgage and property insurance come into play? No. However, there's a thing called renter's insurance. Okay. This protects your belongings. Okay. So if something were to happen, let's say you live on the second floor. Okay. And you fall through or you actually, when I say you fall through, I mean your actual apartment falls through. Or if your apartment catches on fire, okay, you lose everything. If you have renter's insurance, okay, that's going to protect you from actually, protecting your belongings and getting the money for what you have in your apartment, as well as go into replacing the building and fixing it. Okay. So you got to protect yourself. Okay. Understand all forms of insurance allow a person to pay a small amount of money in the present in order to guard against a potentially disastrous event in the future. Okay. So the reason why we invest into insurance, the more we pay into it, the better off we're going to be. Okay. Some things you can go, the easy way and the cheap route. Insurance is definitely not one of them. Okay. Because you want to protect yourself in case something happens, anything tragic, even if it's going to the doctor. You do want to have insurance to essentially help you, eventually save money in the long run. So you're not forking out so much money at a time, and you can also have some protection in case, something bad happens. All right. So auto insurance. Okay. Legally. Okay. This is mandated around the whole United States. Every car or automobile, whoever is driving a car and applying for auto insurance, you must have liability insurance. Okay. Understand, when it means to be liable, that means you are responsible for somebody or something that happens. Well, understand, pay attention now. Liability insurance is only if or for when you are at fault and you cause damage to another person. Okay. So for example, if I were to bump into somebody, where it's a fender bender, whatever the deal is, if I just have liability insurance, that just covers the damages to the person I just hit. It does not cover my cost. Okay. So you got to take in consideration, cars are not cheap. Okay. Hospital bills cost even more. Okay. Insurance helps that. And this helps from, essentially me or you, whoever it is, from owing a significant amount of money for a single accident. Okay. All right, so there's two types of auto insurance. You have your liability, like I just said. It covers the other driver's car and medical bills they may incur. So if you were to hit somebody and they were to go to the hospital, your liability insurance will help cover essentially the person that you just hit, okay, and their medical bills, okay, in their car and getting it fixed. Now collision, okay, this is full coverage, okay, this covers both, okay. Understand, think about this an example. When you collide against somebody and you collision, you're hitting each other, okay. It's both of you and the other person. Think about that with insurance, okay? This covers liability. So if you hit somebody, you are responsible and cover their, on their behalf as far as their car and any medical bills they may have. But it also protects you too, okay? You can cover your bills too. And it also, can, cover your car and make sure both of you are, covered, okay? And essentially, across the board, collision insurance is essentially expensive, or it's more expensive, but you got to take consideration. Would you rather pay a little bit more and help you out in the long run, or just have something as liability and not protect yourself unless you get in an accident? Okay. There's also comprehensive insurance, some additional insurances that protect you from auto theft, insurance providing rental cars, insure while your car is being repaired, emergency roadside assistance, etc. That's all complimentary, and they also have, in case your car catches on fire, they have insurance for that. If a tree were to fall on it, you name it. There's a bunch of different add-ons you can add, but that's totally up to your preference. So, like I said, every additional piece of coverage that you get on your premium, on your policy, it's going to increase your premium. Okay, you got to understand what level of coverage you need and what's the best for you. Okay, this will determine based on how much money you have. All right, so in the next video, we just passed the 10-minute mark. I kind of want to break this up. Don't want to, be on my soapbox for 20, 30 minutes. So I'm going to break it up. I'll stop here and tune into the next video, and we'll go ahead and continue finish on this PowerPoint.